All right, ladies and gentlemen, we're going to talk about how we caught AAOI, Applied Optoelectronics, at the bottom today. Of course, our game plan as well as our live Forex trades. What is the true solution to your trading consistency? The answer is simple. Our full stock analysis. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. I am Mark Melnick, Senior Trading Strategist here at T3 Live, and we're going to teach you something, as if it is such a shocker of what really needs to be done to make traders consistent. You know how many years every single product out there has been talking about that? And it really just dawned on me today as I hosted a free webinar today. And again, thank you guys for a lot of you who attended. And really, the answer is kind of simple. You guys watch these Newsbeat shows. There's a beautiful suite of them on YouTube and on T3 Live's Facebook page. And what is going on here? What is the true solution to being consistent? And the answer is obvious and easy to understand. But first, we're going to start off with our AAOI bottom call. And I know every time you guys watch this Newsbeat show, it's another bottom call. How is this happening? Now, a lot of traders, when you listen to this, one of the skeptics might say, well, how many trades are you calling a day? That you're catching the bottoms of all of these. How many are you doing? How many bottoms are you calling? You know, I call out like a few trades a day. And the majority of them bounce right away and have a potential to make money right away. That is the beauty about what we're actually doing here. So I'm literally going to draw it out for you. And that little yellow arrow at the bottom of the tail, not at the top, not at the upper end, not at the middle end, but right at the bottom of that tail on this 5-minute chart is where we bought AAOI today. And you could just see the move of how it bounced. That's what I mean by buying bottoms. That's what I really mean. I actually didn't happen to buy right here, which was the true day low. I did not buy the red arrow. So just to put, obviously, don't buy here. And where we actually did buy here. Sorry for the small lettering. But that's actually what we did today. See, the trick is when you buy bottoms, it's not to just say, I bought the day low. That's always nice, don't get me wrong. But it's about saying, when you bought it, were you right away? How much pain did you go through for the entire trade? Now, that's very important. I could show you two traders. Let me explain it to you. Let me explain to you what the problem is with Wall Street and all the BS and garbage that you've been chewing up for so many years, just like myself, and why I'm sick of it. You want to know the difference between a trader who buys a stock, takes a $50 stock, buys it, stock goes to 49, then to 51 bucks, and they sell it. They sell it and they make $1,000. They were down $1,000. It goes back to break even. Now they're up $1,000. You have a $50 stock. You bought 1,000 shares. The stock went down to 49. You were down a point, and then went back to 50 and then 51. You want to know the difference between the trader who actually bought at 49, 1,000 shares at 49, and had it go to 50? You would argue it's the same scenario, Mark. Look, the numbers don't lie. The numbers do lie, ladies and gentlemen. The numbers lie a lot. Oh my God, do these numbers lie. The difference between the trader who bought at 50, watched his stock plummet $1 to come and then bounce $2 to net $1,000 from 50 to 49 to 50 to 51, selling at 51, as opposed to the trader who took the same stock and bought at 49 and sold at 50. Trader A, for example, I'm going to spell it out for you. I'm going to show you exactly what's wrong with your strategy and exactly how you can become consistent. So Trader A buys the stock at $50. The stock goes to 49, bounces to 50, and then goes to 51. That's Trader A. He was down $1,000 at one point in the position, but when he sold, he was up $1,000. It was up $1,000. Trader 2, Trader B, bought the stock, waited for the stock when it was at 50 to go to 49, bought at 49 and sold at 50. Mathematics would tell you that both are an exact situation. Both traders netted $1,000. Now, what happened to Trader A? What happened to that first trader? His psychology withstood a blow. Withstood a blow. And eventually your psychology breaks down because you're a human being. You know, every bad thing like that happens to Trader A and to yourself stores in that part of your brain that I discussed earlier in the webinar called your amygdala, a walnut-sized portion of your brain that stores every negative thing that has ever happened to you. Do you know you just added more fuel to that part of your brain? Do you realize how many future trades you're hurting yourself with? Trader A spent psychological capital and hurt himself. And how about the traders who are like, oh my God, I bought this stock today. You know, I bought 500 shares or 1,000 shares or something. I was down money on it, and then it came back. And even though I was down $1,000 intraday, I ended up making $100. You know what that trader actually lost by doing that? You know what kind of psychological damage and toxicity? His psychology was literally poisoned. Literally, negatively poisoned. Trader A on that trade spent psychological capital. Trader B reinforced this capital. Think of your psychology as a castle. You know, the medieval castles with the bricks and the doors and the moats. Trader A, his castle, got bombarded with catapult rocks. And it still managed to withhold even though cracking in several areas and breaking in several areas. The castle still held up. Trader B added extra bricks and layers of protection around that wall and made himself even stronger for the future. Psychologists at Yale say that when something deeply negative happens to you that hurts you, it does as much damage to you as compared to doing something good 7 times in a row. So if you want to cure doing something stupid in the market, you have to do 7 good things to erase out that one bad. It's not a 1-for-1 ratio, ladies and gentlemen. That's why the traders who keep grinding and making and losing and making and losing, they go crazy and they can't do it anymore. Literally. They keep feeling like they're just there and they just missed it. I'm almost there, I'm just going to miss it. I'm almost there, I just can't do it. Can't find consistency. That is the difference. That is the difference. That is the difference, ladies and gentlemen. So when I say you have to be right 70% of the time, I'm actually teaching you how to actually keep your psychology good. Now, I'd like to be right more than 70% of the time. But that should be a good starting ratio. The traders who tell you, I'm right like 45% of the time, but I make money because I make 2 times when I'm right as opposed to being wrong, those are the traders who are on a downward slope who will not be trading for too much longer. Those traders don't exist. Those traders don't survive today because they have so much psychological damage from losing that they just literally, like, their brains change. Like, you ever see that trader? He's like emotionless, like completely, will explode on a dime. I mean, come on. Those traders don't last. You have to be consistent in this market. I know so many people tell you that. Unfortunately, nobody tells you actually how to do it. So here's an example of today. It's a silly, garbage example. I bought shares at the bottom there. You know how many times in this position I was down money? 0. As soon as I bought it, I was up money right away, within seconds. How many of you guys buy something and you're not up money right away? You're down first and then you try to make it back. How many of you guys suffer from that? Why is that? Why do we accept that as the norm? Why do we accept that as a norm? Because you're being taught and lectured by traders who have no business whatsoever lecturing or talking to you. When a trader does a big trade, they'll highlight it. They'll highlight it. They'll show you it. They'll plaster it up, like I showed you one of my old T3 promotions from 2015, which actually didn't work for me because people don't like to see people, they get turned off when they see somebody making too much money off too little money. They think it's either a fluke or a unicorn or something crazy or impossible or a scam. That's what goes through people's mind. That's your psychology. And you know what? You would be smart to generally think that way. But there is a way to buy the day lows in this market. There is a way to buy, not day lows, excuse me, bottoms. Like where you see that yellow arrow. There are ways to figure out how to buy there. I'm going to show it to you. This course that you signed up, I know everybody in this room pretty much. Just about every single member of our room signed up for this course. Why is that? Because you know the value. And what you're going to learn is you're going to literally learn how to do this. You want to start fixing your psychology? I'm going to give you brain exercises. You want to know how to make your mind clearer, sharper, so you make fewer mistakes? I'm going to approach it from psychological perspective to an exercise perspective. Oh no, Mark, you're telling me to exercise? I'm telling you the lazy man's exercise. I signed up for a gym membership. I go for a day, I go for a week. Once I went, not at all. I literally signed the paper and I never stepped foot in the gym. How many of you guys do that? You sign up for a gym membership and then you just don't go. I'm not proud of it. My hand is up. My hand is up. That's me. What if there was an exercise which would take you 2 to 3 minutes a day that you could do right at your chair with no weights? You don't have to do it in front of anyone. You're not going to break out into some obnoxious sweat, most likely. What if there was an exercise like that would increase the size of your blood vessels, increase the blood flow and oxygenation to your brain, increase the speed in which you react to things, and actually make you a better trader on the intraday in the morning? How many of you guys would invest 2 to 3 minutes a day to do that, and you're becoming healthier? How many of you guys would do that? Oh, my hand is raised. That's something I could do. As lazy as I am when it comes to exercise, I'm a hard worker. I'm not a lazy person in general. When it comes to exercise, I just don't give a you-know-what. I just don't care. I mean, I care, but I don't care enough to get my butt up and go to a gym. These are some of the things you're going to learn. I am literally going to show you the steps of how to make less mistakes in the market. I actually figured it out by taking stuff off the internet, free stuff off the internet, scientific studies, scientific research reports done by some of the top universities and scientists on the planet. Taking that information and compiling it, utilizing it, testing it on myself, understanding it, testing it on others, understanding it, and now releasing it. See? So, back to the point, we bought AAOI. Right there at the low. We weren't down money at all. Congratulations for those in the room who are part of that trade. Simple. How about we just jump right now? Because I want to get to number 3. What's the true solution to being consistent? What is really the true solution to consistency within the market? But first, our game plan in Forex. So, what is on my game plan? I'm watching AAOI. That was obviously one of the names we traded today. Beautiful breakout on the daily here, as you can see. Beautiful breakout here of descending resistance as well. Just a really pretty breakout play on a day that really fell through at the end when the market started coming in. So beautiful look there. And next on my radar, of course, is AVAV, which is AeroVironment, and have a bullish trigger through today's high of 55.40. And another name that really broke out in a magnificent way in a market like this, a real outstanding name. I'm looking at AeroVironment for a follow through to the upside. So of course, next on my list, we go into my live Forex trade. So it's very simple. If a trade doesn't get filled, I cancel it and I put in a new order. And here, whoops, it's getting a little cut off there. Just make it big for you guys to see. There you go. So above the gray line here, above the gray line, this is literally a screenshot from my live trading, Forex trading software here. Above the gray line is a position we got filled on yesterday, so I leave that one in. I canceled all the old positions here and put in new ones. You have all the type. These happens to be all long orders, no shorts. You got my size in US standard lots. You got the currency pairing of which I'm trading, or it's the same thing like a stock symbol, really. You have the price of where I'm willing to pay for it. You have the price of where I'm going to get stopped out if I'm wrong. And you have the price of where I'm looking to take profit. Very simple, very easy, very consistent in the long run. So you get to have that for free. And now, of course, I want to get into number 3. What's the true solution to your trading consistency? And the answer is simple, and it's alluding to what I talked about earlier with AAOI, and it's alluding to what I talked about earlier in tonight's webinar, is in order to be consistent, the true solution, because every firm talks about it, why don't they just talk about the real answer? They don't talk about the real answer, not because they're bad, not because they're hiding things from you, not because they don't want you to make money. Of course they want you to make money. It's not like these people are coming to you with bad intentions, just most of them are bad traders, and most of them are bad educators. You have good educators who are bad traders. You have good traders who are bad educators. Very rarely in this world will you find somebody who's a good educator and a good trader. Usually the two do not mix. It takes a long time to figure out how to combine the two things together. That's a fact. Just because you're a professional race car driver doesn't mean I want you changing my engine. Just because you are a professional airplane pilot doesn't mean I want you to build me an airplane. Just because you're a professional basketball player doesn't mean I want you to teach me how to play basketball. Just because you, I, me, whatever is a good day trader doesn't mean that you're going to want me or you to train you how to teach you how to trade. A good trader doesn't equate to a good educator. A good educator doesn't equate to a good trader. And the problem in Wall Street with all these educational programs, which are pretty much all garbage, almost all of them, I haven't seen them all, but believe me, if they weren't garbage, what percentage of those traders who took those courses would be successful? Are you telling me that some high school graduate, college dropout kid can make money in the market, but we have a neuroscientist here who can't make a dime? Is it because of intelligence? What's going on? Where's the disparity? And then you have smart people who are doctors who are making a good living in the market. Where is the correlation? It's chaos. I humbly worked on my entire career on being a good educator and trader. I humbly believe that I am bringing both things to the table. The truth is, I don't think I was the best educator 10 years ago. I had almost 10 years experience as a trader. I knew what I was doing somewhat in that market environment, not as good as I am today. And I did help some people, but the truth was I was at a point where like 20% of people 10 years ago were becoming successful off of my course. I was letting down 80% of the people who took it. 80%. And ironically, I was being told I was doing a good job because over 90% of traders are failing. So I was actually being patted on the back for that, and it felt disgusting. And I stopped doing it, really, because I was like, come on, get out of here. Are you telling me it's that hard to know that why are all these traders failing? They're usually one step away. They're usually one step away from succeeding, 2 steps away from succeeding. That's the problem with it. So what is the true solution to your trading consistency? The answer is simple, ladies and gentlemen. To be consistent, you need a strong psychology. To have a strong psychology, you need to buy day lows or at interim lows like we did on AAOI. To be a good news trader, you need to interpret stocks that are going to allow you to do this, to buy at those day lows. And to be a good technical analyst, you have to have the ability to also buy near the lows of a range. So it all comes back to buying at the lows. It's how are you going to do it? By mixing news into your plays, guess what? All your technical support lines get better. Let me ask you guys a question. How many of you guys out there see your support lines on your chart working, see your support lines on your chart failing, and you have no idea why? It's completely random to you. It works this day, it doesn't work that way. You have no idea what the heck's going on. Why does it work day 1 and fail day 2, fail day 3, work day 4 and work day 5? You have no idea. Now, what if I told you that support lines you're using on the chart are working 45 to 55% of the time, which is not enough to be a consistent trader? But what if I told you when you add a news element to it, that all of a sudden it's going from 65 to 75? And what if I told you if you understand the algorithmic part of it, you're going from 70 to 80%? You know what a filtering process is, ladies and gentlemen? When you take a huge sample size of everything, you confine it into a filter and you're only looking for these parameters. Then you take that filtered part and you put even finer parameters through it, and you take that filtered part again and you look for finer parameters. And now all of a sudden you started with 10,000 units, stocks, whatever you want to call it, and now you're down to 5 or 4 or 3. That's what I'm doing here, ultimately. I'm taking news names that are good. It's the news that makes the technical analysis work. That's the answer. Eureka! Buying a stock on a news name that you can understand is what makes your technicals work. Now, how are you going to understand it? I broke it down into a science on the course. I'm going to teach you exactly how I do it every single day. And not only that, I'm going to teach you how I take advantage of it every single day. And I'm also going to tell you how you can use your technical analysis to combine it with other forms of analysis to even increase your probability further. You want to know what kind of technical analysis works in this market? Every single one. There's not one of them that are ineffective. Every single form of technical analysis out there is effective to make money in the market. Do you know how to utilize it effectively to do so? Do you know how to choose the names in which to buy it or sell it on? Do you know when to ignore it, when to take it? Do you know that? Well, guess what? I'm going to show you. The trick to consistency is psychological fortitude, which comes with being up money when you buy something right away. The trick with consistency when it comes to news is picking names that are going to make you money right away. When you buy something, it's going to go up right away. Making money on technical analysis and being consistent is about seeing a green P&L when you enter a position. People think it's impossible, right? Watch the last 50 episodes of the Newsbeat Show. Doesn't it seem like we're doing it a little too often here? Now, what if I told you you should ignore all the other garbage you're doing that's losing you money and just focus in on things that are making you money? Sounds obvious, right? Well, why thank you, Captain. You mean I should just trade the stocks which I make money on and ignore the ones which I lose money on? How do I do that? I'm going to show you. I'm going to show you how to take fewer trades, less impulsive trades, set parameters around you, cage you into a tight amount of parameters, and watch you capitalize and flourish in this market. If you're interested in that, we have the sign-up link. It is in a description here on the YouTube and Facebook videos. If you're in the room, take advantage of it. Take advantage of it now if you want a live spot in the room. There's going to be a recording of the course, which is just as good. But today's the last day in which I can 100% guarantee you that you're having a live spot. The truth is, the class is filling up rapidly. And I'm not telling you that to push you. I'm telling you that realistically because if I showed you the emails, there are people who are buying this course for their entire trading firm. There's one dude signed up for 10 classes. He wants to give a class to each one of the traders. He's like, Mark, I see the value in what you're doing. I've made so much money following you. I could have just bought one course recording and shared it with everybody in my room. I literally purchased 10 of them to share with every one of my traders because he runs a prop firm. He runs a prop firm. I'm not going to drop the name of the firm. He's a member of this room. He literally bought for his traders, he literally invested $5,000 for his traders to buy 10 of these courses because he sees the value in it. This is somebody running a prop firm. He's there to have his traders trade shares and make money, and he gets a small percent of the money and he makes a little bit of money on the commissions, right? He literally bought this course for his 10 traders. He's running a small prop shop with very experienced traders who are making money. And he wants to bring him to that next level. There are hedge fund managers signing up for this just to be part of the fundamental part where I swing. There are other traders being part of this just for the brain part of the course. Exercises to improve your brain, improve your psychology. There are people who are doing it just for that. There's so many reasons to take this course. You would have to be financially insane, in my humble opinion, by not being part of it. Buy at the bottoms. That really is the trick to buying stocks. That's the trick to consistency. Now, ladies and gentlemen, I go into my full stock analysis. That is for Newsbeat Live members only. We are the fastest growing trading room in the nation for a reason. It's because we buy at the bottom. Happy trading, make money. We'll see you guys tomorrow on the Newsbeat Live trading broadcast. Have a wonderful evening.